Um, today's um stock chart of the day is gonna have a little some literary up overtones. If you remember Charles Dickens' Tale of Two Cities, there's the best of times, the worst of times. It's basically about, for those of you who don't know the book, it's about the early 19th century in the UK and and France. In the France was going through its revolution, the guillotine, an economic collapse, all this sort of thing. Where the UK, even though there was still the last remnants of the U.S. independence and in War of 1812 would come up, but the UK at that time was the superpower of the world, and it would be for roughly over the next 100 years, and controlling nearly a quarter of the world's territory, et cetera, et cetera. And so it was like the UK was booming, France wasn't doing it so well. So now I have the tail of two ends. End symbol stocks. Um, and they are Newmont and NVDA. So Newmont had terrible earnings. Basically said they were going to cut their dividend. They're going to get rid of like some of the smaller underperforming properties. And you can see that was the big gap down. It rebounded a bit on Friday. It's down another 44% today. It's Newmont's really, because it's one of the largest stocks, is hindering, the GDX as well, because it's such a large portion of it. But you can see, and if we go look at a longer term chart, you'll see it's even worse for Newmont. We'll get a 10-year chart to start here, and you can see we're essentially the lowest level. We draw a line here back to 2019. So at the lowest level in 5 years. And back here, gold was only 14 or 1500 an ounce. And of course, we are still quite above the 2015 lows when Newmont, but of course, gold was only $1,100 an ounce back then. So you can see like Newmont is quite beaten up. And like I said, it's trading back now to where it was when gold was $1,400 an ounce. And they're all sustained costs in Newmont around 14 to 1500 an ounce. So they're technically making, so all sustained costs are everything. Like their cash costs are like 1100 an ounce, but all sustained costs are like the cost of developing the mine, everything costs associated with the lifetime of the mine, plus the yearly cost of production. So, those are those have gone up, and you can see like, you see why gold probably really can't go back to 1500, because virtually every gold stock in the world would be bankrupt. And it just shows you too the amount of cost, because when I started investing in the gold market in the late 90s, gold was under 300 an ounce, and all sustained costs were like, that's where gold stocks were having problems, because all sustained costs were above 300. But you're talking like back then 600 an ounce when it went to that in 2005, 2006, you were making heaps loads of the money. And now we're seeing at 2000 an ounce, companies are having problems. So Newmont breaking down to a 52-week low, breaking down to multi-week lows, now is over 60% off its 2022 high when it hit near $80 a share. So just kind of represents the pain we're finding. And the funny thing is, gold is up 12% year over year. Like, we'll quickly look at a gold chart before we get into NVIDIA. You can see gold, this time last year was basically trading between 18 and 1900, and, now it's trading at over 2000, and, from 5 years ago, again, gold has gone up from the beginning of 2019, it was 1200 an ounce. So gold's up 67%, yet these stocks continue to languish. Unbelievable, but they are cheap. But, that's the worst of times. And of course, the best of times would be NVIDIA. NVIDIA, record quarter, continues to blow out everything, continues to be the kind of darling of the market. I don't know why this is not loading up. Just give me a second here. If I can't find it here, we'll quickly go to bar chart. Oh, there's something wrong. My internet connection is fine. I hate when this happens. I'm going to disconnect from my VPN and see if this helps it. Yeah, okay, that did it. Okay, so apologize for that. This should be okay now too. Anyhow, we're going to look at NVIDIA or on bar charts. I don't know what's going on with stock charts right now. That's very, very annoying. Okay, there it is. No NVIDIA, so it's okay. So you can see, NVIDIA since 2019 is up nearly 20 times in value. Since the lows of 2022, it's up actually almost 8 times in value. And since 2014, 15, you're talking NVIDIA is up over 100 times in value. And this is just a 10-year chart. So if we get a 20-year chart, and I can take the log scale up. You can see like how sustainable is this, right? Longer term. I thought it had gone parabolic back in here, and I made money shorting the video. Luckily, I got out of most of my shorts in early 2023. You don't want to get step in front. I think I had a small short here, like a very small put position that was a few $100s, and that's it. I did do a little NVDS here, and then got out the next day. I want to see signs that NVIDIA could top out. But like you can see how this is going. And who knows when you're this parabolic, it could go to 900 or 1,000 or 1,100 at this point. We just don't know. But you can see again, let's look at Newmont because this is a 20-year chart. The kind of the tail of two stocks where Newmont is below where it was back in 2010. $45 now $29, actually over 30% lower. Actually below where it was in 2008 when it was $40 a share. So now Newmont has now basically done nothing in 15 years, whereas, of course, NVIDIA is booming. So the question we have to ask with the tail of these two N ticker stocks is, um, is this a sign that Newmont and gold stocks are bottoming in maximum pessimism? And do we have maximum or optimism, irrational exuberance, as Alan Greenspan would cause it in NVIDIA and other AI and tech stocks. Only time is going to tell that, right? So another aspect of Newmont, one reason to take is they cut their dividend as well to save capital. So anyhow, there's the tail of these two stocks at the opposite end of the spectrum, one in gold and precious metals, which is, we'll quickly get the GDX here to show this. You can see the GDX, which is, nearly 40% off its 2008 highs, and really hasn't gone anywhere again since in 17 years. And then we have NVIDIA soaring in price. So we're just again going to have to see if this represents kind of maybe, two ships passing in the night, as they say. Is this kind of the irrational exuberance or, of tech and AI, and is this the maximum pessimism in gold and precious metals? Only time will tell. So everybody take care, and I hope you enjoyed this stock chart of the day.